Welcome back. Now, all that glitters is currently gold. Digging into the DRDGold's half-year performance, the group enjoyed the full benefits of the 43% jump in the average yellow metal price. As a result, despite a 9% decline in gold output and higher input costs as well, headline earnings per share nearly doubled to over 223 cents during the period. Investors reap the benefits with the interim dividend hike of 67%. The company's CEO, Niël Pretorius, now joins us with his assessment of the performance and what it means for the group moving forward. Hi, Niël. Good to chat to you. All right, the gold price is right up there. Your results are shining, but I suppose it doesn't come as much surprise, does it? Because it's good to be in mining at the moment.
It really is, and especially for us at this particular point in time. You've also seen that we reinvested over that period 1.6 billion rand. And 2 years ago, when we started this 10 billion rand reinvestment program, we thought that we would be deep in debt by this stage because we based it on the gold price at the time. So this is helping us. We finished the period with 1.7 billion rand in the bank, and we're in a position to pay a dividend. So we're very relieved for the gold price.
Yeah. Talking about reinvestment and putting money back, take us through that. What exactly have you been doing?
So both our operations, Crown and Ergo, or rather Far West Gold and Ergo, are now at a point where it requires very substantial reinvestment in order to take advantage of the full potential of both of those operations. So at Ergo, it simply means extending its life of mine to beyond 2040. That operation was supposed to be closing down at this stage. So there we built a very large solar plant, and we're adding deposition space for it. And then at Far West Gold operations, there we really, we pretty much putting in the infrastructure to double its current output from 600,000 tons a month to 1.2 million tons per month. And that too will extend its life of mine to beyond 2040, because that's coupled to a very large tailings storage facility that's also in the process of being built.
Okay, you see, that's interesting. Were these initial plans before the gold price went on this massive march beyond $5,000? Did you see this coming, or was this just preliminary plans?
No. Those projects, in fact, started 2 years ago, and we managed to put a financial instrument in place for that. So we managed to get financing. We were supposed to have been just in debt to the tune of just over R1 billion at that stage, because it was premised on the gold price at the time. I suppose the only regret that we have is that we didn't start earlier. But then again, the life of mine is the life of mine. So we're pleased to be in the position that we're in to fund this at this stage.
Yeah. You spoke there about stepping up production. What else are you doing? Because at the moment, you've got to ride this wave. I mean, it's a no-brainer.
Yeah, no, obviously. So most of our growth going forward would be organic. So the tailings dam that we're building for Far West Gold operations, which is initially designed to or intended to receive 1.2 million tons of material per month, that's been upgraded. It's now going to be able to take 2.4 million tons per month as and when it is fully commissioned, which would be in a few years' time. We're hoping for early commissioning at the lower throughput rate during the course of this year still. But eventually, once it's fully done, it would be able to take 2.4 million tons per month. So that means the opportunity for further expanding the throughput rate at that particular operation, and then potentially also for a regional consolidation of sorts. That opportunity is also being created.
Yeah. You know, what comes or what goes up sometimes does come down. I'm sure you are also factoring that in as well, because not to be a doomsayer, but, you know, the gold price shot up relatively quite quickly. We don't know whether it's going to stabilize. It may go up some more as well. It may come down. Are you making provision for that?
Yes, we are. We're still staying very disciplined in terms of our cost. I think one would be very naive to think that the gold price would never come down, although a big chunk of what we're seeing is structural. There's very significant rise in the recent past. Some of that's got to be based on sentiment or maybe a measure of a degree of FOMO in some of the markets that it lagged. We didn't capitalize early enough on that. So yes, one has to plan for that. Yeah, if you look at the recent history of our company, the last 15 or so years, it's a company that really went through some very, very challenging times. So I think the discipline that is associated with survival is still very much part of our ethos. And yeah, we've been saying, and I know it's a little bit cliched, but if you survive well, you thrive well. So we want to spend this capital so that when the gold price comes back, that all of that would have been put in place and that we don't have to go and borrow any money. We do, though, believe that a very large proportion of this rise in the gold price has been long in the making, and that it is based on structural dynamics, not just sentiment.
Besides what you've mentioned so far, Niël, what are your plans for the second half for H2? Because there, like you say, you've got to navigate very carefully, but it is time to grow.
Yeah. So we call it Vision 28. Vision 28 is pretty much our obsession at this stage. There are 5 large projects that demand all of our attention at this point in time, our entire resource. So we don't want to drop the ball. Obviously, also during this interim phase of production, which with relatively modest throughput, it's throttled throughput because we have to be careful with the infrastructure that we have. They also want to make sure that we don't drop the ball. We do believe, though, that our business model is one that can find application on a much broader scene. And although at the moment, commercially, it is very exciting, the fact that we are reprocessing old mine tailings, it's as close to a circular model as you can get in the resources space. We only produce or reclaim waste. We produce from waste. We don't generate new waste. You would have seen also in the numbers that our carbon footprint shrunk by 34%. Because a lot of our electricity is now from solar, and it's also mainly recycled water.
Yeah.
That model can find application on a much broader platform, not just in South Africa, but both on this continent and globally. So we're starting conversations with other large players in the mining space with mature assets. We're reaching out to them and saying, there's an opportunity here to do something about the condition that your mines are in and bring about the closure of those mines without having to dip into your capital.
Gosh, there's still so much to do. There really is. Niël, thank you so much. And congratulations on those strong results. It's nice to see. There we go. That was Niël Pretorius, CEO of DRDGold.